Here is how you could have made 3% selling euro dollar, even though price went up. Alright guys, so as always, we're going to start off on higher time frame. Here we're over on the 4-hour chart, and you can see that overall price was presenting this very clear and textbook bearish market structure. It was creating lower lows and lower highs, right? And what I saw here was that price had induced this area of 4-hour supply. We had some liquidity resting just below the supply right here, okay? So when I saw this, I was anticipating price to take out this liquidity into the supply. Obviously though, we don't just randomly want to sell from this area of supply. So what we were waiting for is for our textbook lower time frame confirmation. During London Open, we were waiting for price to rally up into this area and sweep that area of liquidity to the left, which you can see it eventually did during London Open, also taking out Asia high into this area, right? So once we see this happen, I jumped over to the M5 chart and I was simply waiting for an M5 change of character and for price to create a lower low. So here you can see once price came into this area of supply, starts to react, sweeps that high to the left right here, and then gives and presents a very nice change of character, right? We also had this area of imbalanced supply created. So at this point, I was going to set a limit on this area, stops just above the high, and as always, a mechanical 1 to 3 TP. And we just let the trade play out. And as you can see, this trade eventually did rally down and hit TP. However, eventually you can see this trade did continue over to the upside, right? But because we were using liquidity to anticipate a reaction and using this mechanical 1 to 3 model, we still were able to capitalize and profit from this move, even though price did eventually continue up.